We all invest in real estate to make money, but that number that you're focusing on, whether if it's value add lift or return on investment, might not be entirely right. So hear me out on this one. For sure, it does matter, but that is only one part of the story. And if you're not thinking about how much time it takes or how much effort or risk is involved, then you're actually missing the bigger picture, and that is where you could get stuck. Now, what's ultimately right for you does come down to your goal, how much capital you're working with, whether you're taking on just one project and trying to squeeze as much as possible out of it from your returns, or if you're trying to scale and you need to make sure that you can recycle your money into your next project as soon as possible. So today, I'm going to be walking you through 3 real opportunities on the market in Toronto, all solid options, but depending on what your goal is exactly, one might actually be a better fit than the other. And before we jump in, if you are exploring multiplex investing in Toronto and you want help finding the right deal for your goals, remember to like and subscribe to our channel and book a call with us. We'll walk you through all of it. Now, let's look at the first deal. It's a turnkey triplex, and you can get it for $1.35 million. It's fully renovated and ready to rent out on day one. There's no work needed, and the value stays at $1.35 million. So obviously there's no value add lift, but there's also no hassle. It has huge positive cash flow right away, over $1,000 a month based on a $320,000 capital upfront, and that's 20% down plus closing costs. So you can think of this as a long-term dividend stock, but you can get better returns because you can get a residential mortgage with better leverage and better interest rates. So here, the capital upfront is the lowest, but you also have it tied up for a longer period of time because you cannot refinance right away like the projects. But if you are looking for low effort, solid returns, and minimum risk, this could be the one. Now, the next opportunity is the Cosmetic Renovation 3-unit house. You're buying an existing 3-unit property for around $1.1 million that needs about $100,000 in cosmetic upgrades. We're thinking stuff like floors, paint, and likely upgrading kitchens and bathrooms too. The renovations are actually pretty quick, around 3 months, and once you are done, this property is worth $1.25 million based on market comps, and that is a $50,000 value add lift. You make the extra money because you're taking on renovations, and the value of the property ends up being more than what you put in. It's not huge, but here's the key. Your value add ROI is 14%, and then your annualized return on this value add lift is actually 69% because it is a quick project. Now, if you don't refinance, cash flow here is about the same as a turnkey option. If you do refinance, your mortgage is obviously higher, so your monthly cash flow here comes down, but then your capital left in this deal is actually lower, around $240,000, which means you have freed up some cash so that you can invest in something else right away. So this one does need more work, but you're getting stronger returns if you're willing to put in the time and money, and it's a great middle ground option. And then next, our third opportunity is a full single family to triplex conversion. So you start with a single family home that you can buy in this current market for $800,000. Yes, this is real, and convert it into a legal triplex for about $200,000 in renovations. We're not changing up anything outside, we're just reconfiguring the inside, and this project will take around 6 months. And once it's done, you can cash flow the best if you don't refinance. And it's also going to be worth $1.1 million. So if you take a look at this, you ended up creating $100,000 in value add lift. The biggest on paper, but you've also tied up the most capital, close to $400,000 of initial capital to get this done. But here's also another interesting bit. Because the project takes more time and more effort and more things can go wrong, the annualized return that actually comes in is lower than the cosmetic case, around 58%. The big benefit here is that you can go back to refinance and pull out a good chunk of your investment capital to reuse right away so that you end up with the least amount of cash stuck in the property. So If your goal is to grow the fastest and you're comfortable with the time and complexity, this can be a great option. But if you are newer to investing or you haven't done a big renovation before, this is where things can go sideways. If timelines drag on or costs creep up, that expected lift can disappear pretty quickly. So this route really does work best when you do have the experience or the strong support and you're looking to pull out most of your cash out and reinvest quickly. So let's bring this all together. If your goal is lowest upfront capital with solid rents and no stress, that turnkey first option is probably your best move. Just know that your money will be tied up for longer. If you want the best return relative to your capital and time, the cosmetic renovation actually looks the strongest. And if you are trying to grow the quickest, recycle your cash the fastest, and you can take on a longer and more complex project, that full conversion does have the most upside, but also the most risk. At the end of the day, it all comes back to what you want. What you're solving for. Is it returns, time, cash flow, or scale? Know your goal, then pick the project that gets you there. And if you want help working through these numbers and finding the right investment opportunity in Toronto for you, book a call with us. We're a Toronto real estate team that works with investors every single day. Whether you're looking for a simple cash flowing multiplex or a bigger value add project, we can help you spot the right opportunities, run the numbers, and guide you from offer to tenants. Just connect with us and let's figure it out together.